Good evening, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday evening webcast. Okay, so from the bunker in central New Jersey, day, I don't even know what, of my kids home from school, quarantine, whatever, social distancing or whatever we're calling it. We got the evening recap webcast. Daily chart. So the Bulls did fight their way back inside the Bollinger Bands. We were talking about that this morning, about whether or not they were going to be able to pull that off. They made a low at 23.52. So you got a couple looks at that 23.50 area. We're trading up and around 2400, 2420 area. We're currently short from 2480. Limit down tonight is sitting at 23.93 half. So we'll see if we get down there. They made one decent look at it, bounced it up to 35, going on 40, bringing it into volume. You got volume weighted average price up at 40 half tonight. So we'll see what they want to do. The encouraging thing, as far as the tape was concerned today, is I would say today, more than at any time in the last 7 to 10 sessions, it really was a fairly, the tape behaved itself today. And you had a couple moments here and there. The technical levels for us held up pretty well. You had to look at the lower band in the 10 o'clock hour. They ran it up. Up into midday, into 2 o'clock, sold it off a little bit into the close, but it was all really tradable. So I had talked a couple weeks ago when all this started that after the real crazy volatility died down, you would slowly begin to get into kind of a volatility sweet spot, which is where the entries are a little more attainable, and the trades continue to run. So instead of trying to jump onto the hood of a car at 90 miles an hour in the fast lane, the car is going about 70, which, relatively speaking, instead of 90, it's a little bit easier to land on the hood without getting yourself killed. So it was a big day in the room. It was bigger than Monday. In excess of 190 handles on really, only really 6 or 7 trades. The rule of 10 that I've been talking about is really starting to apply. And that means, you look at this hourly chart, if you divide everything you see by 10, the moves seem a little more attainable. Instead of a 4-handle chop zone, you have a 40-handle chop zone, which is really violent. It's when you get into those 10 or 20-handle chop ranges where they're literally whipping things at 5, 6, 7, 8 handles at a time, that if you're not really cognizant of risk, you're not cognizant of your entry, and you don't have a plan, you can really get violently whipped out of that stuff, and you can get hurt repeatedly if you fall into that trap. What we try to do in the room is our risk is very defined. Our entries are, our entries are not rote. You can't really do that. The one entry trick I've been using with everybody in the room is nothing anticipatory. Okay? And what I mean by that is on a candle that's heading higher, we're not anticipatorily shorting that candle or shorting that price, assuming or anticipating that price is going to come down. Let it go up, let it exhaust, find a way through, because even if, say it heads up to 82, you don't have to in this tape. You don't have to be there at 81. You don't have to be there at 80. You can be there at 75, and it's going to be fine. Because the one thing that you've got to get jammed into your head about volatile markets if you're going to day trade them is that volatile markets wipe away the sins of poor entries. Whereas in low volatility markets, you really got to watch that risk marker. You really got to watch what you're doing. You've really got to, and that doesn't mean you can be blasé. Doesn't mean you can't, you don't want to be rigorous. You do. But you can't get super upset if you got 78 instead of 80 on an 82 exhaustion move. because if it's going to work out, it's going to head down. And the way we manage our trades, we get risk off the table really quickly, get out of that disaster stop real fast, and basically we get as many free looks as we can at this type of a tape. So again, the one tip I will share with everybody out there is we're not taking anticipatory trades. You can't assume that something that is ripping higher is going to stop and come back. You have to actually wait for it to stop and come back. That's how people get killed in bear market rallies. I mean, the number of casualties from this 2350 area and the ramp up above, and people fighting it and adding and adding and adding and adding, and oh, I guess I'll be a swing trader today. That doesn't work out. And about the time you're ready to bail is about the time it wants to come down. Don't get caught up in that. There's too much opportunity on the upside. So on up moves, anticipatory shorts don't work. On the hard down moves, anticipatory longs don't work. Let these prices come in, let these prices work out, and trade them from there. You'll be in a much better position to take advantage of everything that's going on at that point. So into tomorrow, let's see if we go limit down tonight. If we do go limit down, let's see if it stays limit down, and we can kind of go from there. So everybody have a fantastic night. Take care. I'll see everybody for the morning webcast, and have a good one. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.